Russia's gold hoard looks solid, one of the biggest in the world and supposedly untouchable. But this year, something unusual happened. For the first time since the invasion of Ukraine, Moscow quietly started selling off some of that gold. Not the giant strategic pile you see in headlines, but the smaller, more important one the government actually uses to fund the war. And at the exact same time, Russians themselves are buying gold in record amounts. It sounds backwards, the state selling while the people are buying, but both moves are connected once you understand how Russia's financial system is built. Russia doesn't run on one reserve. There are two. The first is the big fortress reserve at the central bank, roughly 2,300 tons of gold that hasn't moved much at all. That's Russia's long-term safety net. The second is the National Wealth Fund, or NWF. That's the one the Kremlin uses to patch budget holes, stabilize the ruble, and survive sanctions. And that's the one that's shrinking. Before the invasion, the NWF held over 405 tons of gold. Today, it's down to around 173 tons, more than half gone. Its liquid assets, the part the government can actually spend, have dropped from over $110 billion to around $50 billion. So even though Russia still looks rich on paper, the reserve tank they rely on during the war is getting lighter. Why turn to gold now? Because the other options are already strained. For most of the war, Russia stretched its budget by printing more rubles. That pushes prices up, inflation becomes a quiet tax on the population. But by late 2024, inflation stopped being quiet. It was high enough that the central bank had to slam interest rates above 20% just to slow it down. Rates are still around 16.5% today, which is extremely painful for businesses and borrowers. Add in Ukraine's refinery strikes raising fuel prices, and the Kremlin has less room than before to print its way out of trouble. So they've turned to selling gold from the NWF to raise money without kicking off another inflation spike. At the same time, ordinary Russians are doing the opposite, buying gold. With the ruble unstable, foreign assets risky, and inflation eating savings, gold has become the one thing people trust. Households are buying tens of tons per year, bars, coins, anything solid. And they're not alone. Central banks in China, Turkey, India, all increasing gold purchases after watching Russia's dollar and euro reserves get frozen. Global demand pushed gold prices up nearly 60% this year. That irony matters. Rising prices mean the Russian government gets more rubles for every ton it sells. But it also means it's selling off a finite asset at the exact moment everyone else is trying to hold on to theirs. So here's the real picture. Russia isn't running out of gold. The big strategic pile is still there. But the usable war chest, the National Wealth Fund, is clearly being drained. And the fact that regular Russians are rushing into gold while the state sells it tells you something simple. Both sides sense the same pressure. A government trying to keep the system steady and a population quietly preparing for instability. That tension between the official story and the financial reality is one of the clearest indicators of where Russia actually stands today. What do you think this gold drain says about the state of the war?